All righty. So first thing, let's pick a pair to start with. Any pair you wanna pick, and if you can, drop that in the chat. If not, I'll just pick it for you. Nobody? Okay. Again, nobody's talking today. Cool. Um, I don't like those sessions. Bitcoin, GU. I like GU. We'll do GU. I saw some other ones I like. Let's do GU. Let's do Ripple. We won't mess with indices today. But let's go with GU and Ripple. How about that? GU, Ripple. And we're going to take all these indicators off. We don't need them. Okay. So first thing first, we want to do what's called top-down analysis, right? Where we start from the highest time frame and we move down to the lowest time frame. And in doing so, what we want to do is we want to find key levels on the monthly, weekly, daily, 4 hour, 1 hour, and you can go into the 15-minute and the 30-minute, right? In doing so, you want to basically have price levels, which is right here, trapped in between a box, right? So you want to always put the price between a high and a low. And because we're looking at the monthly, we're going to look for the key rejection areas on the monthly and our most recent highs and lows on the monthly. And we're going to trap the price in between that, right? So if I'm looking at this right now, the most obvious high, if I have price right here, is here. The most obvious low that I've had is right here. And you can kind of eyeball this, right? And we know this is an important low because we've seen price reject here, it broke here, reject here, broke here, reject here, reject here, broke here. Same thing over here. It rejected here, rejected over here, broke here, broke here, rejected, rejected, right? That's what you're looking for when you're looking for key levels. Another thing you want to do is, again, you kind of want to know what kind of range you're dealing with, right? This range is about 600 pips. That's okay, because again, we're looking at this from a monthly perspective, right? I'm going to go ahead and label this monthly high, monthly low. I already have some templates pre-populated, which you can do. If once you draw the line, once you have the line, if you right click on it, go to settings, go to text, type the text that you want to have in here, set up the font, the alignment, whether you want to have it on top, bottom, right, center, or left. And then under template, you're going to get a save as option. Name this template and hit save. You'll always have it available within this drop down list, which these are the hundreds that I have that you can get through right here, or you can right click on this and go through the templates right here. Another thing you can do is Just another tip is if you have stuff that you only gonna want to see on the monthly, you can click on this icon, which is an object tree, and you can see everything that's drawn on here. If you hover over the drawings and then right click, you can create a drawing group. If you can rename this, it's like monthly, whatever. This is, you can place everything that's for the monthly inside of that folder. And if you wanted to hide that, you can hide that if you wanted to do that, but that's up to you. That's just an extra tidbit, you know. I like to do that because I like to keep everything a little neat, right? And sometimes I don't want to see a bunch of lines. And when I'm actually trading, I don't want to see a bunch of lines, right? So in this case, we're pretty much done with the monthly. We got a monthly high, we got a monthly low, we got price trap equally in between the two. We don't need to add any more lines. And we don't need to add any more lines because in order for us to get to anywhere outside of this, I have to break these two zones first, right? If I want to get to this rejection point right here, I have to break out of this high first. If I want to get down to this rejection point, which that would be another target, but I have to break from this point where price is now through this low. So I don't need to consider that yet. So I can just leave this long and we can go ahead and move to the next time frame. Okay. So now we're going to go to the weekly, right? We're going to go ahead and look for our most recent weekly low, right? If I'm looking at price, this is a good area for a low, right? Going to go ahead and annotate that weekly low. And then I'm going to look for my high. A good way to look at this is if I took my mouse and went up, where is my next rejection, right? Wouldn't that be right here? If I go up and look at price, I see the most rejection right around this area. So that's going to be my weekly high. There's my weekly low. There's my weekly high. Price is trapped between a high and a low. And for now, I'm done with the weekly. I want to know how many pips that is in between. This is about 200 pips, 250 pips. So that means that my zone is pretty good, right? Just gonna clean it up a little bit. So I got my monthly high, my weekly high, my weekly low, and my monthly low. Price is evenly trapped in between my weekly high and low, and still in between my monthly low and high. So at this point, I can move forward. I don't need to add any more levels on the weekly or the monthly because we're using such large time frames, right? We don't have to worry about going any further into that, right? Let me check the question. Why not the body of the candle? Because we're looking for key levels. Key levels are going to be associated to huge breaks, which this is, or rejections, right? You want to find those areas where you see that it stands out, right? It should be as easy as just finding levels where you see price came to it and turned around or pushed through it immediately. This level right here that we're looking at, Back in 2018, what did it do? It pushed up through this, rejected, pushed back up through this, rejected, and broke through, right? That means that this level is an important price level. And if we were to extend this over to the right, what happened over here? Price pushed up through this level, back to the same high, and rejected right here. That means that this is a key level of resistance slash support. Just like over here, where our monthly low is, right? We rejected, we broke through, we broke through, we rejected, we broke through. Those are the areas that you want to consider as important. It's not going to be every line, everywhere you see that at, but we want to see from a higher time frame perspective down to a lower time frame perspective, where has price made the immediate turns or the immediate breaks in price. Those are going to be the levels that we consider as the most important levels. So sometimes it's going to be a body, sometimes it's going to be a wick. It's just, you won't have any question about these areas because you can see that price pushed up through a point, came back down to the same point, and broke through the same point. These three key areas right here. If I look at this, there's no doubt about this price level being an area to consider. Just like if I look at this level right here, this consisted of wick and body prices, right? But there is still no doubt at this area that price is very, very responsive to this area, just like over here. Very responsive to this area, even as we are here years later, right? It's just like over here, right? This price action happened in 2018, and we are currently reacting to levels that happened back in 2018. So that's why that's important. The bodies, sometimes it's going to be on the bodies, sometimes it's going to be at the wicks. The importance of that is more so, where do we see huge price rejections, or in this case, huge price breaks, right? Okay, so that was a good question. So now we're done with what we would consider the weekly high and low, which are right here. So we're going to move to the daily. We're going to take the same approach, right? Where is my weekly or my daily rejection, right? So another cool way that I like to show people is take your mouse again and go right below price until you get to some wicks, right? And then when you get to these wicks, scroll left. Are there wicks and candles that are aligned with that same area, right? Give or take a couple pips. There are, right? This little area, this little area, this area, all these are about the same area, right? If we look at this and go from here to here, all of this is a rejection or breaking through the same area for the most part, right? So guess what? That's going to be a daily level. I'm going to add it right here. I'll just clean it up just a little bit to encompass as many touches as I can. That's going to be a daily. You're going to do the same thing over here. I'm going to take my mouse. I'm going to move it up. Where am I getting the most rejections? I got a wick here. I got some rejection here, a break here, break here. wick rejection right here. All of this is happening pretty much within the same range, right? So that's my daily high right here. All while I still have price trapped in between a high and a low. You see, you'll start to notice that every time I move to a different time frame, price gets smaller, gets trapped in a smaller window. And you can see that I have the price levels coming in tighter and tighter as we squeeze down on the price. Let me see. How can you use the zone of the month in my trade? We're gonna go to that. We're gonna talk about that. So now I'm gonna measure this zone. This is about. This is gonna be probably like 100 pips. Yep, like 100 pips zone. Still good. Still good. Now we're gonna move. Now that we got the daily high and daily low, we're gonna move to the 4 hour. All right. And here we're gonna take the same approach. I'm gonna move my mouse up. Where am I getting some rejection? This level right here. Wick, 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 body, 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 wick, wick, break, wick, 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 even all the way over here, right? So guess what? That's a 4 hour zone right here. Take the same approach. I'm going to take my mouse and push down, right? I got wicks over here, wicks over here, rejection, rejection, wick, rejection, right? Where is price? Trapped in between this high and this low still, right? And again, as you can see, every time we go to a tighter, every time we go to a lower time frame, we trap the price even closer. Emily says, how can I use the monthly zone? You put your line in a rejection always. It's a rejection or a break. This would be considered a break right here, where we have these two candles breaking through this, but it lines up with this previous rejection right here. It's not always going to be at wicks. Sometimes it's going to be at rejections. Sometimes it's going to be at breaks, which in this case, this would be considered a break. But at the same time, there is an area of rejection that responds to the same area. And that's what I was mentioning earlier. Is you're gonna have areas, it's the key levels, right? Where you can see price easily break through a level and price easily reject the level. There should be no doubt at where these levels are, right? Where you can see price push through an area that it previously rejected right here. It previously was rejecting this area pretty much, but it finally broke through this area right here. And then it came back around and rejected that same area. It even came back around over here and rejected around this same area. So guess what? That's a key level. It should be that obvious, right? There should be no questions about where these levels are, right? Go. We have price wrap between a high and a low. I'm gonna measure this zone one more time. This range is about 55 pips. Okay. And then we're going to go to the 1 hour. We'll go to the 1 hour. So now 1 hour. Yes, that's top down analysis. You want to go from the monthly down to at least the 1 hour. You can go to the 30-minute. You can go to the 15-minute, but I usually tend to stick around at the 1 hour. So over here, take my mouse, go up. This is the first time I get some rejection right here. That's my 1 hour zone. That's my high. I'm going to take my mouse. I'm going to go down. Guess where I get rejection? Right here. That lines up with this area as well. That lines up with this area as well. That's my 1 hour. So for now, I'm going to say I'm pretty much done with marking this up. I'm down to the 1 hour. I have price trap between a high and a low. And I'll say that this will be my buy. So I'm going to buy the break of this 1 hour zone. And I'll be selling the break of this 1 hour zone. If I get the buy, I'm going to buy it. If I get the sell, I'm going to sell it. Right? And I already have targets because, again, we went from top down, right? So if I break out of this sell, where is my first target? It's going to be at this 4 hour zone, right? That's my TP1. If this continues, I have the option right now to look and aim for the higher time frame zone, which is this daily zone. Or I can look at this rejection right here. This is probably going to be your next area, right? So this will be your TP2 right here, right at this area. Because again, I'm looking for next level of rejection as a target. That would be here. But your goal is to always trade from breaker structure to the next higher time frame zone, right? So my trade would be from out of here to first target here. If it retests here, my aim would be here to the daily zone. That trade would yield 45 pips. If I take the buy, I'll be looking to break out of this 1 hour zone. My first target will be the 4 hour zone. We will probably find another little target within this over here. I can see that this area right here will act as a target. It lines up with this area right here. And then the next target is the daily. If I took this trade, this would give me a total of 42.8 pips. And I would look to trade the break of this high to this daily zone. For the buy. And if this continues outside of this, your goal would be to trade the break of, you can add on to this trade by trading the break of the daily zones right here. And your goal would be to get to the weekly. So you're always going to be trying to get from the lower time frame to the higher time frame. right? This is our lower time frame structure right here. From the 1 hour, we're trying to get to this 4 hour zone, to this rejection point, to the daily. Over here, we're trying to sell to the 4 hour zone, to this rejection point, and then to the daily. If it breaks out of here, then this is a new area that you can continue this trade from, or look to enter a new trade, because now we would be breaking out of a daily zone. Our goal then would be to trade from the daily to this weekly. Just like here, this could be a continuation of your trade or a new trade by trading out of a daily zone. Your goal would be to get to the weekly. If price continues, now you're saying, okay, I'm going to go into the weekly zone to the monthly. But along the way, there's probably, because we got this big space, there's going to be targets that I can take in between here, right? So I'll need to see, okay, this is a rejection point. 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 Those will be my targets along the way on this monthly, right?
Sorry.
But for now, we don't necessarily have to look at the weekly, because before we get to the weekly, we got to get to the daily. Before we get to the daily, we got to get to this rejection point. Before we get to this rejection point, we got to get to this 4 hour, right? Just like over here. Before we can consider getting all the way to the monthly low, we got to get to the weekly zone, right? Before we can get to the weekly, we got to get to the daily zone. Before we can get to the daily, we got to get past this rejection point. Before we can get to this rejection point, we got to get past this 4 hour. And that's how you frame it up. It's that simple. It's not rocket science. And your target would be, your TPs would be here. This would be your TP1 at this price. This would be your TP2 at this price for the buy. And then this would be TP3.
All right, quick question.
Yeah.
Okay, so let's say you tried to enter on the sale and you were watching a different chart and you missed that sniper entry point and it's approaching close to TP1. Um, would it just be safe to just not jump in the trade and try to get at TP2, or just look at a new setup, or what would you suggest there? What's the latest time you can jump in that trade after you've missed your entry point?
If I miss the entry, I'm going to wait to see if it's going to retest. And that's kind of why I'll show you in a second. A lot of times when it breaks structure, when price breaks structure, it's going to come back there, right? And if it comes back, I know that I can take the same trade that I took on the break and retest for a retest, right? And I'll show you a couple of examples of where that's happening. This is TP3. Hold on, let me add this. This is TP2. So if we look at this area right here, right? This would have been the break of this area. It pushed up, hit probably whatever our TP1 and 2 would have been right here. And then it came almost back down to the area. This would have been considered a retest, and then traded up to continue. It did it right here as well, right? It broke out, came back, retest, and then it shot up. That's what you would look for in that next situation, right? If you didn't catch the break, you're going to look for a situation where you see price run, it goes up and comes back to your area and then runs from there. So that's kind of why I have this drawn up like this. So sometimes you'll see price breakout, hit target one, you wait for it to hit to finish moving and come back to your area, retest. You want to see the price hold the same area it broke out from and then run from there.
Okay, got it. Thank you.
Got it? Yeah. So the next thing you want to consider is, where is my stop loss going to be? Right? So if I'm looking at a stop loss, you want to try to be 2 to 1 at least, right? So if I'm just looking at these three targets, which is from here to here, I want to make sure that my stop loss gives me at least 2 to 1 or 1 to 1. So if I'm going to trade the break right here, I'm going to put my stop loss under the most recent rejection within this range, from this low, from this high to this low. If I take my cursor and I go to the left, this is probably the most recent rejection area. So my stop loss is going to be underneath this wick right here, right here. So if I get in this trade, I don't want price to come back below this area right here. And if it does, I am going to close this trade if it breaks and close below that, right? Sometimes you don't have a rejection area, and the most recent area you can use is the sell. So sometimes you'll have to use your sell area as your stop loss for the buy, and vice versa, right? Where you put it near or at the same level as your sell. But right now we have a little area of rejection right right here that we should be comfortable with seeing price come to. That's for this, that's for the buy. For the sell, we're going to do the same exact thing, right? If this sells, we're going to be selling outside of this area right here. Our target is going to be this daily zone right here. So now our stop loss, this is also the same rejection area, right? So I can use this as my stop loss for the sell and the buy. So I'm going to put my stop loss for the sell just above this wick rejection over here, right? And as long as it doesn't close above that, I'll be willing to stay in that trade as long as it doesn't close above that. This would give you 2.9 to 1, where you would be risking 15 pips to get 44. Over here, you would be risking 15.15 pips to get 42 pips. And that's a good risk reward ratio. So this is quick and easy, but this is essentially what you want to look for and how you want to mark up your charts right here. So I'll go ahead and send you guys this. Go ahead and send you guys this so you can see and use this again later as an example. So this is GU. And a good leverage. Are you talking about lot size, or do you mean leverage as in 2 to 1 ratio, 3 to 1 ratio? What do you mean by that? It depends on your account. It depends on your account size. I will give you a link to this. Is Let me give you this link. Position size calculator. And the way you use this website is depending on your account leverage. If you got Hugo's way, cop Forex is 500. Your account leverage is 500, so you can trade 5 times whatever your account balance is. I think Osprey is 500 too. I can't remember off the top of my head, but let's say that you are going to take this same trade that we had right here, and we want to risk 40. We want to gain 43.1 pips, and we want to risk 15.4 pips, right? And we know that the price for those is, our entry price would be right here. We're going to copy that because we're going to need that, right? And let's say we have an account size of $500, right? We only want to risk at most 5% per trade, $25. We're going to be trading GU, so we're going to pick asset class of Forex, and then we're going to look for GU over here. GU, it's right here. If we take the buy, our entry price is going to be here, the one that we just picked over here. When we clicked on this, it's our entry price, or we can get this from here, right? And our stop loss, we said it was going to be below here, but I'll pull it out of here. Stop loss is going to be here. Copy this. That's going to be my stop loss. And then my take profit is going to be TP3. We said TP3 is here. That's going to be that. So now we're going to be calculating the buy position. So we're going to enter in long, and then we're going to calculate what our position size should be. Okay, oops, I was being impatient. Okay, so your lot size should be a 0.16 for this trade. If you win this, if you lose this trade, you're only going to be risking $25. If you win this trade, you get all 3 TPs. Your total profit should be $69.82. Your risk reward for this trade is 2.7 to 1. And you see the comments, incredible risk reward ratio. Though ensure the setup is optimal, as you often face a lower win rate percentage. That's okay, because you can take partials along the way. Yes, I will. Now let's calculate what it would be for the sell. So if this is our entry, our sell entry right here, copy that price. Entry price right here. My stop loss price is right here. Copy that into the stop loss. My take profit price is right here. Copy that into the take profit. And now I'm gonna, because we're going looking for the sell, I'm gonna enter the short. And now we're gonna calculate this trades were similar. So the lot size is gonna be pretty much the same. In this case, 0.16, it's almost 3 to 1 right here. If I lost this trade, Again, I would only be losing $25. If I won this trade, I would be winning $72.73. And if you don't, if you need to figure out how to calculate this, again, the long and short position is what you want to use, right? And if you click on this icon right here, the long position is for the buy, the short position is for the sell. And you're going to put your overall target as whatever your maximum TP is, and then this would be for your stop loss for the buy. Your sell is your sell position is going to be where the entry is here. Your stop loss will be wherever you're going to put your stop loss, and then your overall target is where you expect for price to go overall. That's how you're going to get that. And then when you click on it, it'll give you your entry price, take profit, stop loss for the sale. Hang on. Okay, so let me send you this link, and you need to actually map when you're setting up your trades. It's a good habit to look at this website ahead of time. So as you're setting up your trades, you want to make sure that you know what to expect before you get into the trade, right? And you can use this to give yourself an idea of what you should be expecting when you get into these trades, right? Because a lot of times you guys will get into trades and you won't know, what's the level. Like I ain't gonna put them on blast, but I'm gonna say somebody hit me up today and was asking me about the pip count on SPX.
Don't do
This
me
person,
like that, bro. It's
this
completely different,
person
dude.
should know this. This person should know this. Like,
He wasn't
if you
supposed
don't
to.
know your pip count, how are you trading something, right? How are you doing this? Like, it's baffling, right? I'm not gonna call nobody out. But again, if we're looking at SPX, $500 account, I want to risk 5%, and I'm gonna be looking at indices, right? SPX is right here. Let's use the entry from last night. Let's say 47, 39.47. Let's say we use a 10 pip stop loss, 39.39, 39.37. 10-point stop loss, sorry. That's 100 pips.
I'm gonna redeem myself.
I hope so. All right, let's say we looking for 2-to-1. So let's say we looking for 200 pips out of this trade. So it'll be 67, right? And we're looking at a buy, right? So now we got the whole thing set up. So what lot size do we use on this trade? Calculate position size, 0.02. If I win this trade, if I lose this trade, I would be losing $25. If I win this trade and it hit all my TPs, I would be winning $50.10. That is how you get your sizes. That's how you know what lot size to use. That's how you know what your risk reward should be. This is a 2. That's how you know what lot size to use on your account. Maybe you don't want to risk 5%, you only want to risk 3%. I'm gonna change that, calculate it. $15. I would be willing to risk $15 to win $30 on this trade. My lot size will be 0.01, and my risk reward ratio will be 2.004.
Hey Corey,
Yep.
have you ever did it manually? Look for
What do
your
you
position size
look for my
without the
position size?
without
Without this,
the yeah.
of course I can, but that's because I know already based off of what my trade setup is, what I should be using.
Okay.
Yeah, you'll kind of get used to this as your account grows, and the more you do this, the more often you'll know roughly around what your lot size should be, because you'll do this so many times and you'll have a similar trade setup, you know, where you're looking to gain 50 pips or 40 pips or something like that. So you'll start seeing that, okay, I should use a 0.1 or 0.15 for this trade, right? Because you already know, you would have seen a trade that looked similar to this before. So you won't always have to use this position size calculator to get that information. Only when you're trading something you never traded before, or you're trading something that is volatile, and maybe you don't want to risk as much. So you want to put yourself in a position to be able to take the same trades but not blow up your account. you know that's always the goal. Don't blow up your account. Like gold right now, the price is at 17.31. Let's say we took a trade, we use a stop loss of 17.29. That's 26 pips, 26.7 pip stop loss. That's a point that's a 0.154% change in price. And our goal was to get to 1740, right? 83 pips, right? We're gonna buy it, calculate the lot size for this account. I will be looking at 0.05, and my risk reward will be 3 to 1, 3.11, 3.123. I would be willing to risk $15 to gain $46.85. That's a good trade. That's a good trade. So, like, after you do this a couple times, you'll kind of get an idea of what to expect, right? If I'm going to risk 5%, I can use 0.09. I'll be willing to risk 25 to gain 78. That's how you want to interpret that. So I sent that, and I sent the link to this chart. And I think that answered like most of the questions. Markup, trail and stop, take profits. Okay. How to find key levels and trend lines. What's the schedule for the basic calls, right? And then if you want to use trend lines are pretty easy. You want to focus on the higher time frame, just like we mentioned before, higher time frame to the lower time frame. I'll just start with this 4 hour, right? And there's some rule of thumbs, right? You can start with the wicks or the bodies, whichever you prefer. I do a combination of wick and body when I'm looking at trend lines, because I just want to, overall, you just want to know that you've got touches of price, right? And if you see that you got a reaction near these levels, I would still consider those as valid trend responses, right? So if I'm drawing a trend line from here, I'm just going to go quick from the 4 hour. time frame down to you know, to this level here. That's the next time we have price. Could I have drawn it from right here? Yeah, but from here, from this level to here, I could have, but we've already responded to this level. Could I have gone from here to here? Yep, I could have, but we've already responded to this. So now I'm going to look at where current price is right now. So the next time I'm looking at this, I would be looking for price to react to this higher time frame trend line on the 4-hour time frame. You can break this down to a lower time frame where we have a 1-hour trend where we would be looking at this rejection point to this rejection point and extended it out right here. But I am going to want to know what's happening with this higher time frame trend versus what's going on with this trend line right here, because this is the higher time frame move, and we want to see price react to that level more so than we want to see it react to the lower time frame. If we were to go to the 15-minute, maybe we can get another trend line off of that as well, where we see price basically line up with the 1-hour trend, where we had the 1-hour high here and this level reacting to it right here. We'd expect some kind of reaction to price around this area somewhere. And that's pretty much how you'd want to look at your trend lines. Nothing too special. You can, it's a personal preference whether you use the body or the wicks. I think it's best to use a combination of both, because you're going to see that, you know, you may miss a level if you only use the wicks or you only use the bodies, and you may not get the reaction you expected because you were expecting a body to come to it, but only a wick came to it. So it's better to kind of use a hybrid, you know, where you're reacting to both the bodies and the wicks of the candlesticks. So that way you can get the best response to the price levels. And when I'm looking at, let's draw this back on. When I'm looking at the trends, I don't necessarily trade off of just the trends themselves. I want to see a combination of confirmations, right? I want to know that at this trend level, there is a rejection at the same point. So there would be a monthly high rejection, and this would be the start of a trend. Over here, this is near the weekly zone and a trend line rejection. So this is more important than just having a trend line. I want to have a reason to be reacting to that level, not just I see it rejecting or responding to a trend line. Is this trend line near a zone or, you know, a major number, a key level, key quarter or whole number or half number? So I'm gonna want to know those kind of things before I just take a trade off of the trend line. Okay. So that's that. And just to reiterate for you guys that might have got on late, if you need to go back and if you need to get some more in-depth information about how to enter your trades, again, inside of the Discord group, under the trading resources tab, you have trading, under resources tab, you have trading resources. Go back and watch this how-to video, review this chart. If you're looking about actually entering the trades, putting in stop losses, take profits, and trailing stops, watch this video. If you need more help with marking up your charts, under the Go Live, you're going to find Kim's page. You're going to go to favorites, and you're going to watch these 3 videos, and then you want to watch the trading journals too. That's what's going to help you reinforce everything we just talked about today. Plus, I'll send you this video so that you can have this video as well, in order to review as well. And then after that, it's just practice. You just have to practice, practice, practice. You got to mark up charts like every day, even if you don't take the trades, even if you don't, even if you don't ever, even if you're not taking the trades, like I said, you just got to mark it up. Even if you don't trade that particular pair, still mark it up just so you can see, how it looks, how to get it ingrained in your head to the point where you can take a trade without marking it up because you can see the zones already. And I'll take you through another, I'll take you through Ripple real quick. We'll go through Ripple real quick, but this time,
Also, back test.
there you go with this cricket phone. There you go with this cricket.
For real, you can't hear me, bro.
Wrong cricket phones.
There you go with this cricket.
Testing 1, 2, 3. How about now?
I can hear you now, bro.
That is my headset. I said, and more back testing than trading.
Exactly. More back testing than trading. I spend the majority of my time back testing, studying. I probably take 2 trades a day at the most. Right? So
Really, Corey? You only take 2 trades a day?
if you get it, once you get to the point where you take only 2 trades a day, then you're doing something good.
That's amazing.
Because you shouldn't have to. You shouldn't have to take more than that. If I've taken more than 2 trades, it's probably I did something wrong and I'm trying to get my money back. And you guys need to be the same way. You don't have to take a bunch of trades. You don't have to take a bunch of trades. So let's look at Ripple. We're gonna use let's see, which one? Binance. Bitstamp. Okay. If we're looking at Ripple, I'm gonna go through this a little quick. I'm not gonna explain everything, but if you can take everything that I just showed you and apply that, you should be able to understand, right? So let's find my monthly. High, low. Oops, wrong way. Done with the monthly. Yeah, I'll be dropping it. I'll be dropping it. I'm done with the monthly. Let's go to the weekly. Done with the weekly. Daily. And them around since week What's that, Neil?
What's up, bro?
What's up, man? You say something?
No, I'm just saying hi.
Oh, what's going on? Okay, so we got a weekly, and we getting the daily. Done with the daily. 4 hour. Up across where we got this area. Low, high, low. Right here. 1 hour. Sometimes you gotta clean them up too. So okay. So guess what? I'm done. It's gonna be my sell. Oh, it's gonna be my buy. It's gonna be my sell. I'm gonna be trading to this 4 hour. This is a 4 hour. I didn't label it. Sorry. This is a 4 hour. Those are my first targets. If I break out of this sell for the sell, I'm gonna trade to this 4 hour, then to the daily. If I break out for the buy, I'm gonna trade to this 4 hour. We'll need to find another target. So if I take my mouse and go up from here and to the right, the first time I get a reaction is right here. That's gonna be my next target. If I break out of this area. If I go up, if I go up from here, the next time I see some areas of rejection is gonna be roughly around this area, right? And it's really reacting to this area right here. That's gonna be my next target, right? And I like this target to be our last target. And if it keeps going, we can trade to the daily zone. And this will also be another area of another trade we could take. So this could be a new trade set up. So our buy would be from here to here. Our stop loss in this case, if we're looking at a buy from here, this is our rejection point right here. This is where our stop loss would be underneath there. 2-to-1 trade, 2.12. That's for the buy. For the sell, come over here, short position, right here. I like this just to the daily. So we're only gonna have 2 targets on that trade. And then same thing. This is also the same area we will use for a stop loss. This is 2.75 to 1. There's our trade set up for the sell, trade set up for the buy. We would be looking to trade out of this area right here to here down to the daily. If it breaks this area, this is a brand new trade. You could take the break of this daily. You would want to trade to this weekly. If it buys, you want to trade the break of this area and trade to this zone, this rejection area right here. Here's a good example of right now, price is starting to break this. Here's a good live example. Right now, price is starting to break this. We would want to see price break and close below this level right here. And we got about 6 minutes left on this candle. We'll go ahead and play this out as if we're going to actually trade this and walk through the process of whether or not this would be a good trade entry or not. So if I was in the market right now looking to trade, I would be waiting to see how price responded. So far is holding this price right now. We wouldn't be looking to enter yet. We got 4 minutes left, which you can see right here on this candle. Also going to adjust this just a little bit to here as the target one. And I'm also going to put another target right here. So we got 3 targets. 1, 2, 3. We want to see that the price continues to hold underneath this level. We're going to let this candle close before we look. You enter on the close. You want to let this candle close first. And then on the next candle, you want the next candle to push back up to our entry, reject it, and then go. Yes, this is for all pairs. So far, so good. It's holding below. We got a minute and 50 seconds left. Yes, that's what you want to look for. You want to enter on the next candle. Given how this candle is responding, right? This is how you keep from getting into bad trades. When you see the candles push down like it just did, but it is closing right now, it's below. But because of the type of candle this is, you probably don't want to enter on that trade. You want to wait and see how the next candle really plays out, because this candle is a rejection candle. So you don't want to, even if it closes like this, you don't want to take that trade, because that'll give you that'll give you a fake out. When you see the candle like this, that's why you want to wait for a full body to close underneath. So like this candle, full body. Then this candle pushes back up near it and it rejects. It hits at least the first target, right? So if this candle kind of keeps going in this fashion, we don't want to just jump in on that trade. We want to wait and see how that next candle does, right? Because if it stays like this is a sign that it's going to push back up. If it stays like this with this long wick on the bottom. So we're just going to hold off. We got the new candle opening. And you can already see what happened on this candle. It opened up and it's above our level, our sell. So guess what? We don't enter this trade. It didn't do what we wanted it to do. We don't touch this. We just wait. And this is how you avoid fake outs. Because even though this candle closed below, this candle also had a wick, which is a sign of rejection. This candle opened up and immediately pushed back up into our zone. That's how you avoid getting sucked into trades without, even though this met the criteria where this candle broke and closed below, right? But even though it broke and closed below, it had this nice wick right here. So you don't want to use that candle, right? That candle may get you caught up, right? So now instead of entering in on this candle, you want to wait to see if this candle does what you want it to do. If it doesn't break and close below this, you still don't get in a trade. You just waiting until you get the entry that you're looking for, right? You don't do anything. You just sitting on your hands and waiting for price to do what you want it to do. Don't just jump in, because if you're not getting the price to do what you want it to do, then you're not taking your trade. You're just gambling at that point. You're not taking a trade that's properly set up. You're just being impulsive, right? Because if you're not doing what you want it to do, then what's the point of setting up the trade if you're not going to wait and look for what you are expecting the price to do, right? If you're not waiting for it to do exactly what you want it to do, then you might as well just close your eyes and just randomly press buy or sell, because at that point, that's all you're doing if you're not waiting for it to do what you're looking for it to do. So for the moment, we don't look like we're going to get this trade. Let me refresh this. Yep, it's looking like it's pushing back in the zone. If this candle breaks it, then we'll start looking for the next candle to enter. But as it stands, this looks like it's just hanging around. 10 minutes left on this candle. No entry. But I'm not going to hold you guys on this, but this is what you would be looking for. This is what you would be looking for. This is how you would react to these different levels, right? And I'll send you guys this chart too. Let me put it on the 1 hour. And also, given this time of day, I am going to want to see the 1 hour versus the 15-minute, because I don't want to get faked out, so that's another thing you might want to consider as well. So let me send you guys this. Let me know if you guys take this trade, either the buy or the sell. Let me know. XRP. It's in the chat box. Okay. Aha moment. Yeah, that's what I like. I like hearing when people have aha moments. And look, we didn't get in that trade. And because we didn't get in that trade, guess what? We are not in drawdown. We're not about to lose a trade for no reason, because we were patient. Price didn't do what we wanted it to do. So we just wait. And we just look for it to do what we want it to do. Right? That doesn't mean that we missed out. That just means that we just have to look for price to do what we want it to do. And again, yeah, that's it. You guys got any more questions?
No, but outside of the good, the bad, and the ugly, like this has been the best session for me. Like this has been awesome.
Yes,
Okay.
sir. Great session.
All right. Oh, Mike. Oh, what's going on? Welcome, Mike. Mike is new to the team.
Welcome in.
Well,
Welcome.
don't be afraid of this. Like, it's nothing to be afraid of, right? This is, if you using proper risk management, you shouldn't have anything to worry about. You shouldn't have anything to worry about. If you're using proper risk management, like we just went over our trade setup, right? If you got a $500 account and using 5% risk, you should know you're only going to lose $25, right? only if we were to take in this trade, right? On gold, right? This is gold. And we using proper risk management, I shouldn't be worried about whether or not I'm going to lose this trade because I already know that if I lose this trade and I stick with my stop loss and I stick with my targets, I'm going to lose $25. If I lose this trade, oops, or I'm going to gain $78 if I win this trade. If I have to take partials along the way, you know, at least if I hit TP2 or TP1, I'm gonna at least have $25 because that's one. That's the one. That's the half of this trade at TP2, right? Roughly around that. I should at least have the $25 on this trade, right? So even if I don't make the 83 pips that I was looking for, if I make half of that, right, I would have made at least $25, right, off of this trade. So either way it goes, I would have at least made between 1% and 5% of my account on this trade at any given time. That's what you always want to look for. And as you can see, still not ready. We're not in this trade. It didn't meet our criteria on the 15-minute or the 1 hour. We're not in drawdown. We're not losing the trade for no reason. It's rejecting it. And we still just wait. You could throw your alarm on this and just wait for it to break this at any given time. And then you'll have the opportunity to get in this trade. For the new guys, again, take advantage of the Discord, right? Your Kim has all of her markups for the Sunday calls. Go back and review these, right? Monday markups. If you are in advance, go back and review these. Your Wednesday basics call, go back and review these, right? Find, one of your charts should have all of these on there, or one of your charts should have all of this info on there. If you want to get into advanced, this is what the advanced requirements are going to be, right? Finish the academy at least twice, attend the basic call, watch your favorite sessions on Go Live. That's what these are. Have TradingView on your phone and your laptop. Mark up at least 25 charts. Know how to use MetaTrader. At least have taken 25 demo trades. Get in the chat. And one of the leaders, myself or Kim, will approve you after we review all the charts, right? And then finally, make sure you're consistently showing up on these kind of calls, on these sessions, because we know who comes, we know who show up, we know who don't. We might not say it, but we pay attention. And then once you get in advance, you get that Monday night call where it's, a small group of people where we all just go in and just basically back test and give out setups. Your homework, when you're dropping your charts in here, drop your charts into the homework section and then tag your leader in there. And you probably want to send them a message too, just to let them know, hey, I dropped my charts in here. I tagged you in here, so you can go in and check them all, because it'd be like tons and tons. Some people will even like email them to us as well. So that's another thing you can do. And then, take advantage of the resources tab. And if you are a Spanish speaker, everything, all the charts and stuff, I put them in here too in Spanish. I don't speak Spanish, but I know how to use Google Translate. However, comma, I can speak a little Spanish. So, if you got a question, you can ask me in Spanish or English. I can understand it. I might not be able to tell you everything back in Spanish, but I can interpret it. So yeah, if you feel comfortable just speaking in Spanish, you can send it to me. I'll know how to figure it out. Yo hablo español un poco, pero no tengo, yo no sé cómo escuchar porque gente es hablar muy rápido and no entiendo nada. I don't know if I said it right, but I can get with my point across, right? So
Great.
It was good.
Yo necesito practicar mucho, mi amor.
yeah, I need to, right? And this is, I just needed probably a little more practice, and I'll probably be fluent in that. But that's a whole nother subject.
Or you just have to communicate with other persons more, you know?
Yeah. Yep. So,
Speak the language.
all right, y'all. I'm about to hop off. About to go eat and see what's going on with this car. So,
Hey, you want me to pull up and check on that car for you?
I mean, I'm probably gonna have to have it get jumped. So
We're living the same thing over here, Corey.
yeah.
Except for I have a mechanic over here. Didn't turn out to go for
Just
me.
need to get it jumped. So let me send a link. So let me go ahead and stop. Oops, not this sharing, but